Hey, what's up, traders? Just a quick reminder, we're still doing this contest. If you'd like, comment, subscribe to all the videos that I post this month. We're going to pick somebody who's done that for the course of the month and give them free access to the full academy. And if you already have access to the academy, some sort of call with me. So check out our video for a winner of last month for February, and I'll probably hop on a call with you anyway. So like, comment, subscribe, and we'll choose a winner at the end of the month. And thanks for your support. Peace. What's up, everybody? It's March 22nd, 2020, and man, I'm excited for the markets to start, to get my mind off of everything going on, and really get back to business. I talked about this in my video yesterday, and I think it's just super important that we not forget that, you know, the situation sucks. Let's try to make the best of it. This is a good time right now that we can focus on learning about the markets, to be positive, learn about how to trade this type of volatility, and, you know, like, become better traders and to like put our minds onto something positive. You know, a lot of times people that join my group and stuff are like, dude, I don't have time to go through the training. I don't have time to be in the chat room. Well, guess what? You got time now, you know, so there's no excuses not to, you know, you can learn a new skill right now that will, you know, be a game changer for who knows how long this is going to last. But you can come out of it a whole new person with a whole new game plan about life. And that's really what I want to offer the group. And for me too, man, because I've been like, you know, just stuck in a loophole of reading news articles and conspiracy theories, and man, it gets to be a dark place. So, you know, I want to really direct that type of energy into the group, into you all, into my followers, viewers, people that are mentor, people that are in the VIP group. And if you're not in there yet, now is a great time to get started, and you can learn a new skill. And, you know, there's no better time than now if this is something you've been wanting to do. So that being said, let's get into it. Let's look at, you know, what could possibly be the scenarios. I think the best thing, and oh, by the way, if you want to get started, click the links below. Please like this video. Please subscribe to my channel and comment. And we'll be giving a contest, you know, giving a winner to our contest at the end of the month away. So that'll be pretty exciting, but you got to do all three of those things. So that being said, man, I think the best thing for us to do is to focus on looking at the equities, looking at the indices, and not really trying to pick a bottom so much as to, but really prepare for, you know, when the tide might turn around a bit, because it's super volatile. I really want to urge you all to be trading very, very small, trading on a demo if you're a beginner, for sure. And, you know, just take your time. And the idea here is not to, you're not going to get rich in the next 2 days trading this, but, you know, you can build a platform for yourself for long-term success for sure. You know, if you take your time doing this, and this is what you know, you have to learn to do as a trader for sure. And not just as a trader, as a human, as a business owner, as an entrepreneur, in a relationship, all that stuff applies to this. So we can learn a lot of lessons here, you know, if that's the way that we start to go about it. And, you know, that's the way I'm trying to look at this. So that being said, let's take a look at the charts, and we're going to look at the indices. And I think, you know, I talked about gold yesterday in our precious metals video. I think that's going to be a great opportunity. I still think dollar's going to show some strength, but you know, we'll see. For sure. So, you know, here's the S&P 500. This is the megaphone formation that I was talking about. You can go back to my videos in November, December. You know, probably I should like just unearth some of those and just review them. You know, honestly, I can't believe that it's coming true to this degree. It's pretty wild, pretty insane. But, you know, we can set some different trend lines here. And this could potentially be a stopping point that we're at. This is a pretty strong level. So I'm using these fractal points here to draw this trend line. Now, if we do, I'm not saying we're going to stop, but we might bounce here. And, you know, if we do, at the bottom of this megaphone is also the 61.8 Fibonacci retracement. So, the best thing you can do in trading is to look at where all these different things line up, where the confluences are. And so, we definitely have a confluence here with 61.8. This megaphone, the bottom of this crazy megaphone pattern, it's huge. And so, if we don't kind of stop here, maybe we'll start to kind of bottom out around the 61.8, which would come in at, 2000. So who would have thought, a few weeks ago, we were at 30, almost 30, we're at 3,400. And now here we are at 2000. That's just insane. So, but this is a once in a lifetime. It really is opportunity to, get in on a massive dip that, like if you play your cards right, if you stay in the game, I'm talking to myself here, stay in the game, play your cards right, and buy this dip and, just start to barely piece in on it and trade around it and just be observant of what's going on. So when we do catch this, eventually this is going to turn around, you know what I mean? But it may, hopefully sooner than later, for God's sakes. But, it could take some weeks, could take some months, but, eventually we will rebound back, even if it's next year. And, we could be trading, up here 4,000. And I know that's super long term. You're like, dude, okay, 4,000, we're down here at 2,000. But this is the long-term trend of the S&P 500. So, man, I really hope we don't hit these lower levels for sure. But I do hope that, we push higher and make new highs eventually. And I am optimistic. I'm not going to say confident. I am optimistic about the world economy and especially the United States economy that, we will eventually make newer highs, and so if that's the case, God, if we can just get in on this or ride this thing all the way up as a group, as a team, man, it's going to be life. It could be potentially life-changing for all of our incomes and our finances and stuff. So I'm going to have a separate little account that is just like long-term. I'm holding it, especially when I'm like, dude, this is it. I think I'm in. Stop loss to entry. This is my little nest egg. And, if it could appreciate a few times over while this thing goes up, man, I mean, that would be amazing. I know for me, and I'm sure it would be for you. So that's the S&P 500. The Nasdaq here looks a lot stronger, right? So here is the same. Let's go to the weekly chart. If we did the same type of megaphone line, right? So this is the massive breakout, which is a false breakout now, and break inside this throwover line. And if you're curious about throwovers, check out my video in the training how to trade throwovers. This is like, you couldn't ask for a more better example, that's for sure. And so here is our megaphone line. So if this is the case, this would say, dude, we have some downside here. So we'll see, but not as much or more downside than the S&P 500. And but on as far as this goes, maybe we don't make it that far. So from this former low here to the breakout high, where are we at? We're almost at the 78.6% retracement, right? So you can see just how I use that Fibonacci there. And so maybe we might, find some support coming up here. This would technically look like that could be a possibility. So let's go more long-term. We'll go from this low down here in December. And now that would have us at the 38.2% retracement. So, just like I said before, look for the confluences. So if I can just go back and from the former low to the high and see where both these Fibonacci levels seem to line up. So this is a good signal, a good sign. So, maybe potentially, there's a lot of stuff up in the air right now, but maybe we might have a bit of a turnaround coming up. So we'll see. But maybe we could get in some more risk on type of activity, or, maybe a little less yen strength. Or let's take a look at the Dow Jones. If we're going to just cross over some of these major US indices, and the Dow looks pretty much the worst of them all. But if we go to a draw our megaphone pattern here, it would look like we could potentially be at the bottom of it. So, which would kind of support the idea that maybe we're coming up to a little, at least a breather in the downside, which, for the love of God, for the sake of everybody, let's hope that's the case. So here we are from lows here. And right down here, which will be pretty close to it, is 50% retracement. So I'm actually going to pause this and send these 3 charts out to my group. All right, so done. So that's one of the advantages of being in my VIP group. One of the many advantages is getting all these charts and getting set up. So here we are in NZDJPY, and I'm looking at the weekly chart on all these charts. Usually for the weekly outlook, I do a daily chart, but man, we're in like some long-term territory here, and it's really just trying to figure out when we might get a breather, a break. The world needs the world's taking a break right now, that's for sure. So you can see where we are. Here we are in NZDJPY. So I drew the Fibonacci from this low to this high here in the weekly chart. And if I zoom in, you can see how the 61.8 here held up pretty well. So I think that is another sign, and you can see that across the board for many of these JPY pairs. Okay, so you can see we're kind of at a stopping point on NJ there. So let's see if this narrative moves along with other yen pairs. So this is the best way that I like to approach seeing if maybe we are at some sort of mass stopping point. So that was on the weekly chart for NJ. This is EJ, and we're still not quite to the 61.8. We were trading this pretty well and successfully last week, but then of course did get stopped out a couple times. And this is what I was looking at. This break right here, we had this significant gap. So, whenever you see a gap like that, it means, that is a significant place in the market. And so here's tons of wicks. So the price is kind of trapped around here. And what I was doing was selling against this trend line. And you can see these wicks stopped us out going above it. But I still like this area a lot. I think, anytime you can get around here can be a good selling opportunity. And now this is going to be a good signal for now euro, not so much as like NZD or AUD as far as like risk, because the euro has been a pretty risk off asset on this for this whole debacle for sure. But we're at a point on EJ that we're either going to see more downside here, and that would be in response to maybe we see the indices take another dip. who knows what kind of fundamental things could happen right now. But this is going to be an area to watch right here for sure. Let me pause this, send it to the group. Right. So yeah, very pivotal area there. Now let's take a look at UJ. UJ has been just on another level, man. Can you believe, like, when this started, you know, we ended up down here at 100, and now here we are at 110. Man, so hard to know when the brakes are going to be put on this thing, but we're coming back to, now if we go to the weekly chart here, you guys probably remember, because I mean, it was only like a month ago. And if you're in my group, we are trading this pretty extensively. But here we are again, back on this, like, this massive multi-year downtrend line. Let's see where we're at on the daily chart here. So I think the risk here, and so this is the false breakout that happened. And like, if we go by the mantra, false breakout usually leads to a breakdown. Geez, look at this breakdown that we got following that. That is, epic proportions. So here we are. I really hope, I'd like to see, now maybe we gap higher, maybe we gap above this line. Now, if that's the case, and then we're back in breakout territory, then UJ will be one to watch. That maybe we make a run up here to 114, definitely at least 112.50. And but the thing about these markets right now, we could break out and be at 112.50 within a trading session. So that's why it's so important to trade small right now. So this is definitely going to be a very, very significant level to watch here. I'm going to be watching for a gap, but I would like to see, maybe we get up to these wicks here, 111 area. We're at 110.75 now, maybe 111, 111.25. which will provide another great, the risk to reward is just too good there. And I think, maybe looking up there for some downside and putting a stop loss above that trend line is going to be a great opportunity, because if we do get the downside, then, we could easily be back down to 107 within a trading session. Now, if I am correct about maybe we see a little bit of a bounce and some risk on, then that could be the catalyst for us to break out and break higher in UJ. So, man, this is going to be a pair to watch for sure. And UJ and EJ, yen pairs, and then of course the equity. So I hope you found this video helpful. It's going to be a crazy week, of course, but you know what? We're getting down to it. Business as usual. We're not going to let this virus and this quarantine stop us. And in fact, we're going to use it to make ourselves better, make our group stronger, and become better traders. So that's my goal, 100%, to come out of this better and with momentum for moving into the future. So if you're watching this on YouTube and you'd like the sound of that, click the link below to get started. And for all the people that are in my group, man, y'all are the best. Let's crush it this week. I'll see you in the VIP chat room. Peace.